The U.S. national debt just exceeded $30 trillion this week. But here in Idaho, we finished the fiscal year with a $1.9 billion surplus. Hey, what's up? It's Benj here with Triple Cord Real Estate. And in this video, I want to give you an update on what has been happening here in the Treasure Valley. So I have 3 stories to highlight for you. But first, let me talk about this income tax reduction bill that has just been passed. As I said, we finished the year with a surplus of $1.9 billion, which is the most that Idaho has ever had in surplus at the end of a fiscal year. And this has put us in a historical position, a once-in-a-lifetime position to return some of that money back to the taxpayers. So $500 million of that surplus is going towards education and is going to also be invested in transportation. And then $350 million of that is coming back to the taxpayers as a tax rebate. So here's how it works. Let's say you made $100,000 in 2020 and $100,000 last year, 2021. And you paid the full amount. So you paid 6.5% of your income to state income tax. Well, according to this law, you would get 9% of that $6,500 that you paid to the state of Idaho back as a tax rebate. And that's for 2020, and you would get 12% back for the taxes that you paid in 2021. So that comes out to about $585 for 2020. and $780 for 2021. And your tax going forward is going to be less. You're not going to be taxed at 6.5%. You're going to be taxed now at 6%. So again, if you're making $100,000 a year, that's a reduction of about $500 in your annual tax that you pay to the state. So all of those combined, that's about a $1,500 tax package that you are being given by the state of Idaho because they ended up with a surplus. The second story that I have for you is the recent upgrade that Idaho has been given on their credit score rating. As you may have heard, I mentioned this in a previous video as well. Idaho has recently been upgraded by the Moody Investor Service, which is the nation's leading credit score provider. They give credit ratings, research, risk analysis. So this is a big company. Well, they've recently upgraded the state of Idaho from a AA2 credit score to a AAA credit rating, which is the highest rating that you can get. And they gave an analysis or a rationale for why they upgraded the state. And listen to what they say. They say that Idaho's recent upgrade reflects the state's continued positive economic and demographic outlook and positive governance changes to increase reserves that offer increased protection against the state's volatile economic and revenue structure. In other words, what they're saying is, in their view, Idaho is being fiscally responsible. And they also gave a statement on what they believe the outlook is for Idaho moving forward. They say that the state's stable outlook, that's moving forward, reflects the expectation that Idaho's strong economic growth trend will continue and conservative fiscal management will balance new growth-induced needs with structurally balanced financial performance and ample reserves. In other words, what they're saying is moving forward, they see this trend continuing. They see Idaho continuing to balance their budget. We're going to continue to see economic growth. We're going to continue to see a population growth. And for that reason, they upgraded us to this AAA credit score. And I actually did some additional research on the state of Idaho's debt just to see how our debt compares to other states. So I looked at all 50 states and I put all of the information in a spreadsheet. And I looked at the state's total debt. So starting with the state that has the least amount of debt, that's Wyoming. They have a debt of about $2 billion. We are ranked number 6 as far as the state's total debt. Now, this number is a little bit obscure because it doesn't actually reflect the economies of each state. I mean, Wyoming has a smaller economy, so you would imagine that they would have a smaller state debt. So what I did is I then ranked the states according to the debt that they have compared to the GDP. And when you look at all of the states ranked according to this category, Idaho is ranked number 2, just behind Wyoming. our debt to GDP is 7%. So our debt is about 7% of our gross domestic product, which is the second lowest debt to GDP ratio out of all 50 states. Now, if you look at the total debt divided by the number of citizens, we are actually ranked number 1. The total debt per citizen living here in Idaho is about $3,328. That's the lowest debt that any citizen in the entire United States has as compared to all the other states. So no matter how you slice the numbers, Idaho sits in a very good financial position. We are ranked at the very top when it comes to debt versus GDP, or debt as divided up amongst the total citizens of that state. So moving forward, I think we're going to continue to see growth. We're going to continue to see a strong economy here. So what does that mean as far as house prices are concerned? I don't have a crystal ball, but I can say that if we continue to see population growth, if we continue to see a strong economy, continue to see businesses growing and developing here, I don't think that's a recipe for house prices to go down. I think if anything, we're going to see a flattening out perhaps, and perhaps just a milder rise in house prices in the coming years. Again, I don't know for sure, but to me, that seems to be the outlook for what is in store for us as far as the house prices are concerned here in the Treasure Valley. So finally, the third story I wanted to highlight is a bill that currently is being debated in the Idaho Senate. It has just passed the House with a pretty big majority. I think it was 54-14. But what this bill does is it blocks the rental application fee cap that is currently in place in the city of Boise. So currently, if you are a landlord, you are not allowed to charge more than $30 for a rental application fee. So this bill would do away with that cap. And as you can imagine, some people are against that, and I totally understand that position. Their argument is if you take away that cap, landlords now can very easily take advantage of potential renters and charge as much as they want. I totally understand that position, but there are a few other points on the other side that I think you should consider. Number one, not only landlords can take advantage of consumers. Pretty much anybody in the marketplace can do that. If I'm selling a property or a service, what's to stop me from suddenly charging much more? If I'm a baker, I can charge $100 for a loaf of bread rather than $2.50. So it's not just the landlords who potentially can take advantage of the tenants. Anybody in the marketplace can do that. But why is it that loaves of bread aren't being sold for $100? Because of competition. And so I think in a truly capitalistic society, we should allow the regular laws of supply and demand to dictate the market forces. As soon as the state or the government steps in, usually that muddies the water a little bit. And that leads me to the next point to consider. Will the government even be able to fix it? Name one thing that the government has been successful at fixing. It seems to me that usually when the government steps in, that usually makes things more complicated, and it really exacerbates the problem rather than solves the problem. And then the other point that I wanted to mention is what's next. If the government can put a cap on rental application fees, why can't they put a cap on rent prices? And then from there, why can't they put a cap on rent price increases? So where does it end? So I think there are a number of other points to consider on the other side when considering whether or not this is a good bill. But what I think that this bill does is it highlights the role of government, or it highlights what most Idahoans believe about the role of government in our daily lives and in our business activity. Do we want the government to step in and tell us what to do? Or do we want free trade? Do we want a truly capitalistic society where the market forces are dictating the terms of the game rather than the government? So we'll see what happens with this bill, but if the Senate is anything like the House, it may pass. And the other thing that I'll mention is that Boise currently is the only city in the entire state that has a cap on rental application fees. So the argument that suddenly, if that's taken away, landlords all across the country will take advantage of tenants doesn't seem to have the data that supports it. We're not seeing landlords take advantage of tenants in Caldwell, in Nampa, in Eagle, in Cuna. So if these caps are removed in Boise, I'm not convinced that we're going to see a major change in landlords' relationships with potential tenants. I think the market is simply going to be the force that's going to dictate what rental application fees should be. Thank you so much for watching. If you're thinking of moving to the area, please feel free to reach out to me. I'd be more than happy to chat and answer any questions you have. I've also written a number of resources on buying a home and visiting the area. The links to those free downloads are in the description box below.